day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and we're at the 26th of June, 2019, about 3:25 p.m. Central Daylight Time. So as we're looking at everything, folks, you're going to reopen the markets, but these will be the settlement prices and all the stock indices, and it's quiet. You'd expect this to be the case. The market is now in that wait-and-see mode to see what happens at the G20. Does anything positive or negative happen that's possibly going to move the Fed as the Fed meets again in July, and everybody's just sort of waiting. There's many different ideas floating out there. Some are that Presidents Trump and Xi will, of course, embrace each other. Everything's great. They're going to send their negotiators back to the table. However, that's where the whole thing will fall apart, because one school of thought is, why would President Xi do anything just yet? President Trump is not doing that well in the polls, probably according to Chinese analysts. They can afford to wait a little bit. And President Trump can't do any deal that doesn't include all the things that he thinks had already been agreed to, and we can see the Chinese backed off from it. But rather than say that to each other, they probably go through the motions, and then we find out later it's just not going well. Do I know that to be the case? Absolutely not. The market would like to think different, but we'll see. Like to think that, hey, both come to their senses and realize got to get a deal done for everybody's economy. But gold down, the silver down, the copper market down. Very quiet in the currency markets. It was like watching paint dry in the marketplace today. The exception was the pop that we got in the energies off of the EIA number coming out and confirming what the API did. In fact, it was bigger. The API yesterday showed that net draw in products and crude was over 10 million barrels. This one's over 13 million barrels. So something big is going on. This isn't catch up, and that's a very good part for the market. Bonds and notes putting some yield back in as the market's just now getting ready to see whatever next is going to happen in G20, and that begins Friday. So when you look at a weekly area chart of closes, we're down 35 points in the S&P. The market's got support all the way back at 2865 and resistance up here in the 2950 area, and that's a close-only chart. When we look at a daily chart, you can see that the market did rally into this resistance point and has since backed off. Now, the question is, how much is it going to back off? And was this a top, or is this just a correction in the market? So far, the only way I can answer it is you do have the pattern of higher lows and higher highs. That is bullish. You'd have to take out 2889 in order to break that pattern. When I look at the 18-day average of closes, it's climbing each day, and it's climbing to the tune of about 15 points a day or so. So tomorrow that number's likely to be over the 2900 level, offering support as the market comes up there, trying to defend, not getting back underneath the last swing line low. In terms of resistance, as I pointed out this week, we have not been able to get back up to an upper Bollinger Band, which is not a sign of strength. That's a sign that the market's running into resistance above itself, and momentum has turned down. So you've got all kinds of divergence going on. You got momentum pointing down. Momentum often leads price. That tells me price and the 18-day average may well make a run at each other here. The second thing is you've got the trend up and the bias up. So a confusing time in the market. In the NASDAQ, you've got the trend down, lower highs, lower lows. So that's very different than the S&P. Momentum down. The bias is up, which tells me that in the marketplace, if you make a run down here, I'm going to look for support first at the 20, let's just make sure what that is. Yeah, that's going to be the 75.20 area down to the 74.38 level. So I'm going to look for, in some manner or other, support between the 100-day and the 18-day average of closes. Given that the swing line trend is down, you'd have to close underneath 75.20 to get the market have both the trend down and bias down and momentum down. That'll be the trick there. In the Dow, lost its upside momentum. That often leads to price and the 18-day average coming together. Now, in this market, we're seeing this market move into the neighborhood 25,964, 25,900, 25,879. I'm going to try to say about 30 points a day, 40 points a day. So around the 26, 160 level, that could be the support there. That's a bit away from where you're at right now. So I'm just looking if prices do come down, support between the 18 and the 100-day average. And again, momentum is turned down. And in the Russell, you're fighting your battle now at the 18-day average of closes. You hit that yesterday. And as we were talking, I don't know if the market's going to get away from it or not. Often that first challenge, the market sort of stalls out. Now, I am watching momentum still pointing down here, not yet in oversold territory, but it'll get very little to get it into oversold territory. In the VIX, you're stalling against the 18-day average of closes. That's so often what these markets do. They're overbought. You've hit the 100-day and the 18, and you've got what? You've got higher lows, higher highs. The settlement looks at 1621 over the 18-day average. You're just overbought. So trend up in that, points down into the other indices. In the bond market, what stopped the market is the upper Bollinger Band. See that black line? Remember what a Bollinger Band is. It's an algorithm designed to keep the market trading within the bands 95% of the time. My theory is, especially in sideways markets, the first time you hit it, it offers a lot more resistance than when a market starts and breaks out of sideways action like it did here and then keeps hitting the band. A very different type of pattern. And I wouldn't be surprised if the market wants to come down, get back to the 18-day average, what I term that line in the sand, and regroup a little bit. 10-year note, pretty much the same thing. Now, come Sunday night, it's going to be a different world because we're going to see what the G20 produced. We're going to see everybody's take on what went on, from President Trump's to, I guess we'll hear from the President Xi. There's just going to be a lot, and you're going to have to digest that. But today's only Wednesday. You've got until then. In TLT, you've got the pattern of lower highs, lower lows. So the trend is down, momentum is down. You're over the 18-day average, so I will look and say that I would be surprised if when the market hits 131.58, it doesn't sort of stall out on this decline. Certainly nothing bullish there. In the dollar index, you got to the lower Bollinger Band, you found support, and you're getting a minor bounce in it, and it's the flip-flop in the euro. Now, what was an area that could have been resistance, and if you go back on the 100-day, I can turn back here, and you can see it's been a pretty good guide. On the way down, I would expect that the 100-day, the green line, could offer some early support with more support seen at the 18-day average should the market want to correct an overbought condition. In the British pound, I was watching today Boris Johnson as he was giving a live interview. Interesting character. I have no idea what's going to happen there, but you have the pattern of higher lows, higher highs. The settlement today at 127.34 or thereabouts is still bullish. The market pulled back to the 18-day average. Again, that line in the sand, it's stalled out here. Getting over today's high tomorrow could put the market back on track for more upside, but you're fighting momentum that is trying to turn itself down. In the Japanese yen, you've got a tired market at this upper Bollinger Band, so some money's coming out. The problem is that money might go right back in if it doesn't like what it sees on the G20. I don't know what's going to happen at the G20. Here's your higher high and lower and low. I'll be surprised you don't get to that 18-day average and stall. The stellar performer of the day, Bitcoin, up 21% today, up $2,365. This is not for the faint of heart. This market has now got, whether it's a Bitcoin or not, 1, 2, 3, 4 days in a row. I don't think it did it here, but I'm not certain. This close was 96.25 underneath the Bollinger Band. So you got 4 in a row closes over the upper Bollinger Band. I'll give it a 1% chance tomorrow of staying over that. I'm not bearish. I just think it'll move to the right-hand side. But this market, a powerhouse right now. And they get some reasonable volume during the day. It's certainly not like the other indices and so on. And this market, obviously, since the word Libra came on and Facebook talking about it, whether that ever gets going or not, or central banks allow Facebook to do a currency like that. The problem is that has gotten notice for Bitcoin. That's not good or bad. I say problem. The notoriety came from that, and this market caught on at the same time. On the energy markets, you're still seeing the markets overall, the differential between Brent and WTI come down where they're getting back in line. They're only $7 apart. They were 9.25 apart. When you look at the resistance, August Brent is now up into the Bollinger Band 100-day average. That's a pretty stiff resistance area. Yes, it got some good news today, and it's hoping to get better news if it can get world trade back and going. Same thing with our WTI crude. It's fighting at the 100-day and the upper Bollinger Band. Obviously, you got Iran scares through the market, but this is more about supply. And when you saw the API and EIA numbers show large draws, now the question is no longer coming down with oversupply. It's can we keep the market supplied if things are good? Gasoline keeps running to the upside, up today sharply at 192.41, well over the upper Bollinger Band several days in a row and overbought. The market fought a battle at the upper Bollinger Band and 100-day average and popped higher finally. The question is now, will it be able to hold on to those gains? Nat gas still, even with the warmer weather, unable to come alive yet. Now, when it does, it just doesn't like that. And the first resistance is the 18-day average. After that, the upper Bollinger Band. But you're not in a downtrend. What you have now is a market with higher lows, higher highs. Under the 18-day average, so the bias is down, but momentum is up. So you've got a market here that's spinning like that, looking to see what it's going to do next. And I talk about this each morning. You know, what I do is I get up early in the morning, about 5. I read, and by 6 o'clock in the morning, and that's Central Time, I'm already recording videos. And the pages look like this that I record. I'm not in them. I've got my headset on, and I'm talking to you like we were sitting together. And I'm going through the charts early in the morning, trying to prep you for what's going on. I'll talk a little bit about what happened in Asia so far, what's going on in Europe, the reports, if we have any big ones coming out during the day. I'm assuming you've got your cup of coffee at your office, your home, wherever you're at. And I'm going to cover the marketplace, 40 charts on futures, about 3 to 5 on ETFs. I'll add things if I want them as well. And I'm going to talk chart action, what I think the pros are doing, and what I can do in this video that I can't do anywhere else is say buy here, sell there, do this, do that. Very, very specific. From there, you get to see mentoring, if you will. You're seeing why I'm coming up with what I'm doing, how I'm coming up with what I'm doing, and you take it from there. You decide, does that fit in with what you were thinking about the market? Gee, you were thinking of getting long gold. Look what I was saying there. Or I was saying this on the market. That's the idea. There is a charge for it. I get up that early for a reason. I get 26.5 cents for your trial period per day for 30 days. And after that, if you want to stay, and there's no contract, it's $15 for 30 days thereafter, $156 if you want to buy a year at a time. Pretty simple, $13. Go out and get other subscriptions that cheap. I don't think you will. In any case, if you like what I'm doing here, you should take a look at that. At a minimum, you're out $7.95. Go to our website, www.iraepstein.com. Under the word research or education, there's a pull-down menu. You'll see Ira's morning subscriber video. Read about it. You sign up right there. You can also click here. If you're watching me on YouTube, it'll take you to that page. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.